So let's go to those employment numbers out today. The 3.8% is much better than the market forecast, as Ed said, and is made up of an increase in full-time employees of 27,900, but a fall in part-time workers of 34,500. The number of people unemployed has increased by around 20,000 to almost 570,000 people. But total hours worked increased to 1.95 billion hours. Let's bring in here Laura Besarati, market analyst with Commsec. Laura, many thanks for your time. Let's just start with these numbers. They were better than forecast. So the Reserve Bank has, well, something of a dilemma as it starts to sit down for its next meeting, doesn't it?
Yeah, look, that's exactly right, Ross. So we did see those numbers coming in. If we look at the employment rate, it fell by 6,600 jobs. As you mentioned, the unemployment rose from 3.7% to 3.8%. That's a slight uptick there. The survey expectation was for 3.9%. But the important thing to note here is the trend. So in this case, it is the trend that is your friend, you could say. And I guess that's because we have seen quite volatile numbers coming from these job figures in the past few months. And that's really been due to seasonal challenges and changing work patterns. So I guess when we look at the trend figure, we've seen around 29,000 jobs being added per month. And we have seen the unemployment rate steady at 3.9% for around the past 5 months. So this is really what we should be focusing on here, is that trend rather than those individual monthly numbers.
Yeah, it's really interesting. Just looking here, the participation rate down a little bit. Monthly hours worked, as I said, was up. The one trend that you note there is the number of unemployed people. And the number of unemployed people is up by 11.2% in the year to the end of March. And that at least shows that some of that pain that was anticipated really is starting to come out in these job numbers now.
Yeah, look, I guess the main thing to note here was there were no nasty surprises. Of course, in last month's numbers, we did see a lift of around 117,000 jobs being added, and that was quite an upside surprise to markets. So I guess seeing that fall this month was well received by markets. And I guess what it comes down to from here is what this means for interest rates. But in terms of what the RBA will be doing, this data doesn't suggest anything that could see the interest rate moving higher or lower. I guess it'll all come down to the very important quarterly inflation numbers, which will come out next Wednesday, and that'll be ahead of the RBA's next interest rate meeting, which will happen on the 6th and 7th, with that decision being handed down on the 7th of May. Now, at this stage, there's about a 90% chance that interest rates will remain on hold at their next meeting.
I was going to ask you about that inflation rate, because that now is the dual mandate of the Reserve Bank, having both inflation and employment, or full employment, as their mandate. And so now that you can see that employment remains very, very strong, the inflation number becomes important, especially given as it hasn't really trended down as aggressively as some might have thought.
Look, we are seeing inflation moving down to the RBA's target range of 2 to 3%. We are seeing signs of the economy cooling, and I guess that's exactly what the RBA wants to see. But as it has been for quite some time now, Ross, we are waiting for that more data to be coming out, seeing any sort of trend that's coming out in that data. And I guess that'll be what it comes down to when the RBA does make their next decision.
It does. But then we go to the market reaction. You mentioned about that 90% chance of rates being on hold. But there's a second aspect of this, and that is long-term government bonds, even short-term government bonds. Their yields have started to rise in recent times here and around the world.
Yeah, look, we did see US bonds at around 10-year bonds rather, at 4.7% just 2 days ago. But generally, we have seen them falling in the past day, and that's sort of trickled into what we've seen with Aussie bonds as well. So we've sort of been following that trend. We did have that jobs report helping the bond market, but really it was what we saw in the US that drove today's moves.
Great stuff. Laura Besarati, many thanks for your time.
Thanks, Russ.